Welcome to the Business of Travel, the official podcast of the Global Business Travel Association. I'm Chris Ely, Research Director at GBTA, and I'll be your host for today's episode. Today, we're going to talk about key findings from the newly released Business Travel Index, also known as the BTI, sponsored by Mastercard. And joining me today is Jon Gray, Principal of Rockport Analytics. Jon, thanks for joining us.
Very happy to be here, Chris.
Awesome. Thank you. So let's start thinking about some of the background. So this is the 14th year of the BTI. It encompasses about an exhaustive look at about all components of business travel spend in 73 countries and across several different industries. I believe about 44 different industries. So we've been through, obviously, to say that the world has been through a shock is an understatement. So we had the pandemic where business travel, in fact, almost all travel just grounded to a halt for a period of time. We're now seeing people are returning to travel. And the last BTI, the sort of the benchmark spend was in 2019 when we hit $1.4 trillion in global business travel spend. That's certainly all components of a business travel, air, ground, transportation, meals, etc., across the board. But I wanted to get your thoughts on. So let's talk about, first of all, what happened after 2019, and then think about how we're building up right now and where we're at right now. So if you can give us some insights into where we've been and where we're looking to go this year.
Yeah, absolutely. So, as you mentioned, we pretty much came to a standstill as an industry, right, in 2020. And so what we saw was essentially through the last 3 quarters of 2020, business travel activity came to almost a complete standstill. Mm-hmm. We saw a decline of nearly 60% in travel expenditures. And that was happening, in every region of the globe. That actually understates what truly happened on a year-over-year basis, right? Because the first quarter of 2020, we were on track. We were tracking just like we were with 2019. So we were having a very normal quarter of business travel growth, and we ran into the pandemic in March, and things pretty much came to a standstill. And so we ended up down about 58%. But the good news is last year in 2021, the global vaccination effort began. We started to see vaccines be rolled out. We started to see people return to business travel, albeit in various different ways. A lot of shorter trips, taking trips on the road, a lot more domestic travel, a lot less international, a lot more transient, not as much group. But by and large, we started to see people get on the road again. And so we actually saw business travel increase last year by about 6%, which was down from what we had forecasted prior to convention last year. We were expecting about 16% growth in travel expenditures. We did end up with a slowdown both with the Delta variant in mid-2021, and then we had a bit of an impact from Omicron later in the year as well, even though most of those cases didn't really start to mount until 2022. We actually saw some impact on travel expenditures. So the recovery has definitely begun. 5%. I know it seems like not very much, right? After what we went through in 2020, but we also need to put that into perspective too, because we're comparing against a base year again in 2020, where we had a very normal quarter in the first quarter. So if we take a look just at those last 3 quarters of the year in 2021, compare them to the last 3 quarters of 2020, we actually recovered about 65% last year.
Wow. And how would you characterize this recovery? I mean, certainly the BTI looks at regions, the different regions. So what are you seeing, and what did you see in the BTI in terms of regional development? It's probably not safe to say it's not consistent across regions, but what are some of the differences you've seen against the different global regions?
Yeah, so it's far from uniform, as you mentioned. We've been talking since the recovery began in the BTI, we've been talking about this divergent recovery, right? Different parts of the globe recovering at different paces. And that is continuing. But we are seeing some shifts in those patterns. For example, early on in the recovery, we saw Europe lag tremendously. So, it's hard to sort of remember the exact timeline of this recovery, right? But if we think back to the early days of the pandemic, when here in the U.S. and in Europe in particular was sort of ground zero for the virus and then the growth in case numbers and in the shutdowns, right? And so we had a lot of economic shutdowns. We had a lot of travel bans put in place in across Europe and here in the U.S. It's easy to forget that China, for example, over that period of time, from a domestic standpoint, there was a lot of business travel still happening in 2021. And so we saw China outperform the U.S. and significantly outperform Western Europe over that period. But what we've seen in the last couple of months has been a major shift in that trend, right? What we've seen is as people have higher rates, or countries rather have higher rates of vaccination, we're starting to see borders open back up again. We're really seeing that pent-up demand in Western Europe start to pick up. Obviously, a lot more travel is international travel in Europe than what we might see in Asia Pacific or even here in the U.S. And a lot of those routes are starting to pick up volume, where China and Asia Pacific we're seeing actually lag in 2022. So where they got this big head start in the recovery, now with zero COVID policy in China, all of the shutdowns that have occurred, slower GDP growth in China, we're starting to see Western Europe pick up the pace, the U.S. pick up the pace, and Asia Pacific actually lag in 2022.
What would you say characterize? I mean, we're seeing growth, but we're also seeing headwinds across the world. We certainly touched on inflation, oil prices. The war in Ukraine is actually having quite a bit of an impact as well. And what are some of the other headwinds, and how do you think that those headwinds impact not only just recovery, the immediate recovery, sort of maybe right now, from now until maybe then forward, we're looking into the next year, but also thinking about regional? I mean, how specific headwinds are they impacting certain regions a little bit heavier than other regions as well?
Yeah, absolutely. And we've talked about, as long as we've been doing this study, 14 years now, these driver variables, things that drive business travel, right? And very specific economic indicators that we look at that shape business travel in these different regions around the world. And we've talked about the fact that those things have mattered less as we recover from the pandemic, only because people just can't travel, or they don't feel safe to travel, or COVID cases have been heightened and it won't allow them to cross borders, et cetera. But as things start to normalize, as travel policy starts to normalize a little bit, both travel management policy and sort of national travel policy, and our sentiment starts to rise as business travelers, right? We're all starting to feel comfortable again, getting on the road, attending meetings like the GBTA Convention here. We're starting to see that the macroeconomic environment matters again. And that has been a great thing for us in sort of late 2021, because we had this huge surge in things like business confidence, consumer confidence, a lot of stimulus dumped in various different economies around the globe, and it's really helped to support the recovery. But over the last number of months, probably the past 2 quarters, we've started to see a lot of economic headwinds, as you mentioned, seep in. We've had issues with inflation over the last couple of years as we've recovered. but it's been much more persistent than anyone really expected. And one of the big reasons for that you hit on is the war in Ukraine. And that has really sort of taken us to another level in terms of the supply chain disruptions, rising energy prices, rising food prices, and have led to much bigger expectations for inflation. And so inflation in and of itself is not necessarily going to slow the recovery. In fact, we're looking at spending. So higher prices typically mean higher spending, but that also hurts things from the demand side, right? If it's more expensive for business travelers to take that trip, more expensive means rising budgets across corporations. We can expect those things to start to slow. The other impact of this higher inflation is what central bankers around the world are doing to curb that inflation, right? Generally speaking, central bankers like the Federal Reserve here in the U.S. have two main mandates. One is to provide price stability and keep inflation in check, and the other is to help support employment. Employment's been very strong. Economies around the world have been growing very quickly. Inflation, as we've talked about, has ramped up. So it's led central bankers to ratchet up interest rates. And what happens when interest rates rise is typically economies tend to slow. And so those tailwinds that we had early on through the pandemic's recovery, things like the stimulus that were injected in the economy, are going away. And in fact, we're starting to see more headwinds in the term of monetary policy and more hawkish monetary policy.
What is this? What did the study find, or in terms of looking at just sentiment towards business travel, thinking about where people are at after we looked at business travelers themselves and companies. I mean, share some insights into what we found, what the BTI finds in terms of just where people are at, so to speak, in their.
Yeah, it's interesting. We've conducted surveys. We did a round of these surveys of both business travelers and financial executives leading up to convention last year. I think we conducted those surveys around October-ish last year. And we did the same thing this year. We went out and surveyed business travelers. We surveyed financial executives. And just to sort of take their temperature on how they're feeling about travel again, right? Again, we can't have a full recovery until everybody's participating, right? And so it was interesting to see that responses have changed significantly around all regions in the globe. Business travelers are feeling more confident with their ability to get back on the road. Not surprisingly, as again, we start to become more comfortable with living in the COVID era and traveling in the COVID era, we see vaccination rates rise. And so we're seeing business travelers more comfortable and confident that business travel will recover. In fact, we are up in the over 90%, I believe it was, of business travelers globally expect that their travel volumes will have fully recovered by the time we get to the end of next year, the 2023. We did see some regional differences in those numbers as well. There was consistency between North America, Europe, Latin America, expecting an even faster recovery than Western Europe and North America. And Asia Pacific, not surprisingly, is lagging. We've talked about some of the challenges that we see in that market with shutdowns in China, slowing economic growth. And I think culturally too, there's some pretty big differences about how comfortable business travelers are in getting back on the road. And so we think Asia Pacific, for those reasons, is likely to lag.
Thinking about, there are other, as the world is climbing out of this pandemic, and there are other, certainly more different concerns, and some other issues that the industry and the world is focused on, surround issues, for example, around sustainability. And one thing that we've we've seen in GBTA research, or some GBTA research, is that in the name of sustainability, it's not necessarily that we're expecting to see no business travel. Companies but certainly more concentrated, specific, not just maybe seeing more clients in a meeting, in an area, instead of just doing a one-off trip here and there, which might have been more common, but also for cost reasons. And thinking about the issues around sustainability and in pricing and trying to be more efficient. What are your thoughts, or what are you seeing in terms of looking at the future of what we're seeing now and maybe in the immediate future about how business travel might likely change to address issues around sustainability, but also be a little bit more strategic, I think might be a better way of looking at it. Maybe increasing the number of client visits or sales visits, maybe thinking about different ways that to travel. We've certainly seen, for example, in Europe, which has a more extensive rail network, for example, people taking business travel and using that. So just thinking about, tell us your thoughts in terms of the business travel. How might this impact, sort of the new trends to address more societal concerns? How might that impact business travel and business travel spend going forward?
Yeah, it's a great question, and a lot to unpack in terms of trends. One thing that is extremely challenging right now as a forecaster, right, is understanding, what sort of macro shifts this pandemic is going to have on us as a society, as business travelers, right? And so we're closely monitoring those things and trying to understand the impact of, sustainability obviously isn't new because of the pandemic, but it's certainly, there's been a more specific focus on sustainability. And I think there's been some mind shift among certain companies, amongst business travelers. And so those things are likely to have an impact on the forecast. There's a number of secular shifts that we're sort of monitoring. What is the impact ultimately of technology going to be on business travel? At the margin, are we going to impact, some of these trips? Might technology give an opportunity for more introduction that helps to foster additional travel volume, right? Our different work styles that we have post-pandemic, not that we're post-pandemic, but after the pandemic has begun, our different lifestyles. A lot of us are able to live and work away from our normal office places, right? And so that adds a whole new dynamic to business travel and where people need to go and when they need to go back. And this whole notion of return to base travel, where employees live everywhere, but then, they need to come back from time to time to base to have that face time and interaction with their colleagues. So I think all of those things, sustainability, the impact of technology, the impact of these new work and lifestyle sort of changes that the pandemic has brought about, are definitely going to make us think a little bit differently about business travel. And are going to have a longer term impact on volume and spending. So those are things that we're closely watching and we'll be evaluating as we continue to do this work and see what sort of impacts those trends have.
So finally, wrapping up the BTI, and it's a 5-year forward-looking forecast. So let's tell us what the next 5 years, based on this most recent release. What do you see? Where are we going to be right now, from now until 2026? What do you?
Yeah. So as we talked about, we've seen, a real pickup in momentum in the recovery. And so in 2022, we're actually expecting that business travel is going to recover to about $1 trillion this year globally. That compares to the 1.4 trillion that we saw in 2019 prior to the pandemic.
Which is the high point, correct? That was
the high point. The high point right. ever was 2019. And so we can expect to see about 65% of that by the end of this year, which I think is pretty good. It shows we've made some pretty solid progress. And we expect, again, the recovery to be divergent and to pace differently from one region to the next. But we do expect continued momentum into 2023. We've really gone through a lot as a society and as companies and business travelers in terms of getting ourselves ready for this moment when we can start to see more of a full-fledged recovery. And by the end of next year, we're expecting about 80% of pre-pandemic business travel expenditures to come back. And looking forward to the very end of our forecast horizon, we expect by 2026 that we will have recovered to over that 1.4, actually almost $1.5 trillion in business travel expenditures. So still a few years left to go before we get back to that level of spending. And I will say that has slowed a little bit from what we forecasted last year because of some of the issues and the challenges that we've talked about. With Omicron in late 2021 and early 2022, we saw, a bit of pause of the recovery. It probably cost us a couple of quarters in terms of when we were going to regain our pre-pandemic levels. And then these challenges that we're seeing from an inflation standpoint, the war in Ukraine, the slowdown in China, some of these more secular trends that we've talked about, like sustainability and technology, are all having a bit of an impact on that forecast, which should lead to a slightly slower recovery.
Right. Well, thank you very much, Jon, for joining us today and sharing your perspective on the BTI. I think this is again, one of GBTA's signature, if not the signature research project that GBTA produces each year. And we look forward to learning more insights about it and seeing how recovery comes. So thank you very much. And we look forward to continuing our discussion and see where we end up next year. So
Great.
Thank you so much.
Thank you, Chris.
Thank you.
You've been listening to The Business of Travel, the official podcast of the Global Business Travel Association. For more information about GBTA and its work, visit gbta.org and be sure to rate and review us wherever you get your podcasts. Until next time, thanks for listening.